Most people think September is the worst month for investors, but my portfolio not only grew faster than the S&P 500, it also paid me 9 times in cash. In this update, I'll show you exactly how I did it and how you can apply the same approach. I'm Stephen Williams, the Dividend Dad. I've spent 20 years in the brewing industry, just a regular guy with a job, a family and bills to pay. But I realised I was great at brewing beer, but not paying my future self. So I started dividend investing. In my first year, my portfolio grew 43%, and in this year I'm already ahead of the S&P 500. Now I share my journey to show everyday people how to improve their quality of life today, while building wealth for tomorrow. My mission is simple: to help as many people as possible protect their financial future. September was another good month for me. My portfolio gained 4.23% and the S&P 500 also had an impressive month with 3.5% gains and reaching all-time highs. So I outperformed the S&P 500 again. But the truly amazing part is, year to date my portfolio is up 26%, absolutely smashing the S&P's 17% and my annual target of 14%. Which will keep me on track for my $100,000 target. My portfolio balance is almost 2 months ahead of my milestone targets. You can really see the power of reinvesting those dividends now. And remember, your cash loses value every day it just sits in the bank. That's why I want my money working for me. So let's break down the biggest winners and losers this month. My biggest winners were IBM with 15%. Caterpillar with 14%, Dell with 14%, SPDR Gold ETF with a 10% gain, and AbbVie with another 10% gain. But on the downside we had EOG with minus 10%, Pepsi with minus 6%, MasterCard with minus 5%, Amazon with another minus 5%, and Colgate with minus 5%. More winners than losers this month, and that's always nice. People think you need to be a Wall Street pro to invest, but look, I'm just a dad who tracks everything on Google Sheets. Now let's talk about what I bought and sold in September. I increased 3 positions. Here's the breakdown. So 5% of my $541 contribution this month went to a dollar cost averaging strategy for the SPDR Gold ETF, resulting in buying 0.08 shares for $27. And using the same dollar cost averaging strategy for Bitcoin, I used another 5% of my monthly contribution, resulting in buying 0.0002 pieces of a Bitcoin, or 20,000 Satoshis, for $27. Next, I increased my position in United Health Group. I bought 1.51 shares for $486, bringing my total amount of owned shares to 2.19. I didn't sell anything this month. I know, it's quite a quiet month in regards of buying and selling. Sometimes it's like that. My strategy can feel boring, but boring is powerful when it compounds. And now, the best part, dividends. In September, I had 9 companies that paid me a total of $12.32. That's $2.31 more than last month. I know. I can put my name in the waiting list for the latest Lamborghini now. Well, maybe not just yet. So here's the breakdown. I had Microsoft with 18 cents, Visa with 11 cents, Simon Property Group with $3.14, IBM with 32 cents, Pepsi with $2.60, Amgen with 98 cents, Rio Tinto Group with 34 cents and Realty Income Group with 52 cents and United Health Group with $4.13. My portfolio dividend yield is currently at 2.54%. That's expected to give me an annual income of around $150 and roughly $13 of passive income a month. September is usually one of the weakest months in the market, but this year it surprised everyone. All three major indices hit all-time highs. The Fed even cut interest rates slightly, which gave the stocks an extra push. But here's the thing, headlines like this come and go. One month it's rate cuts, the next it's government shutdowns. If you're investing for the long term, like I am, none of this changes the strategy. For me, it's business as usual. I'll keep dollar cost averaging into my gold ETF and Bitcoin, and using my stock comparison spreadsheet to decide which dividend stock gets the next boost. The strategy may look boring from the outside, but that's the beauty of it. Consistency compounds. I'm not trying to get rich quick, I'm building something for my future self, and my family will thank me for it. Every reinvested dividend, no matter how small, even the 11 cents from Visa, is another brick in the wall I'm building, bringing me closer to that $100,000 goal. That's why I'm not chasing the headlines or trying to time the market. My focus is simple: build wealth step by step, and show everyday people that financial freedom isn't out of reach. If I can do this as a regular dad with a family and a job, so can you. So thanks for watching. If you found this update helpful, make sure you like and subscribe so you don't miss out on October's update. Will my dividends jump even higher? Also, it really helps grow my channel and reach more people. Don't forget, I've also got my beginner investing series here on this channel. Short, simple videos designed to help you get started with confidence. Perfect if you're just beginning on your journey. And if you want to connect even more, join me over on the Dividend Dad Facebook page. That's where I share updates, behind the scene thoughts, and have conversations with other investors just like you. My whole mission is to show that an average person, a regular dad with a family and a job, can build a solid financial future through consistent dividend investing. And you can absolutely do it too. Thanks again for being a part of the Dividend Dad community. I'll see you in the next update.